What is a fair startup valuation for angel investors? If you are an entrepreneur seeking funding, understanding startup valuation is essential. Let's break down what a fair startup valuation looks like for angel investors. For early-stage companies that have not yet generated revenue, valuations typically fall between $1 million and $3 million before any investment is made. This is known as the pre-money valuation. Angel investors usually contribute between $25,000 and $100,000 each, with total funding rounds often reaching between $250,000 and $1 million. In return, these investors expect to acquire about 20 to 40% equity in the startup. They aim for a return on investment of around 20 to 30 times their initial investment over a 5-year period. Since many startups at this stage do not have significant revenue, angel investors often relying on specialized valuation methods. These methods focus on qualitative aspects and comparisons rather than traditional financial metrics. One common approach is the scorecard method. This method compares your startup to similar companies that have recently received funding in your area. Factors like the strength of your management team, market size, and competitive landscape play a role in adjusting your valuation. Another method is the Barkis method. This assigns dollar values to key components of your startup, such as the soundness of your idea, the development of your prototype, and the quality of your management team. The risk factor summation method starts with a baseline valuation and adjusts it based on various risks, including technology risk and market competition. Lastly, the venture capital method estimates your startup's potential exit value and expected investor returns, then works backward to determine your current valuation. Several key factors influence how angel investors decide on your valuation. Startups in high-demand sectors like software or biotechnology often receive higher valuations. A competitive advantage, such as intellectual property or a strong first-mover position, can also boost investor confidence. Even if your revenue is minimal, having a clear business model and a plan for monetization adds value. Additionally, the current economic climate and investor appetite for risk can significantly impact your valuation. For entrepreneurs without a traditional degree, grasping these valuation methods is vital. To secure a fair valuation, prepare thoroughly. Have a clear business plan, demonstrate market knowledge, and show progress on product development. Assemble a capable team to help reduce perceived risks for investors. In practice, aiming for a valuation within the typical range of $1 million to $3 million while clearly articulating your startup's strengths can position you well for angel investment. Remember, negotiations will balance your startup's promise with the risks that investors take, so being transparent and realistic in your projections is essential.